These doom and gloom articles keep coming. It's as if they want to talk the market down. But hey, nevertheless, they're reporting the quote unquote news. I suppose Yahoo Finance, but they are reporting what RBA, Reserve Bank of Australia, is commenting on or predicting. RBA warns home prices could plummet 15% in 2 years. Reserve Bank of Australia (RBA) said Aussies should prepare for higher interest rates, which will in turn hit property prices. In its financial stability review, there's a link there, and which obviously I'll paste to this article in the description. So in its financial stability review, the RBA said both banks and borrowers need to consider the potential for a drastic drop in property prices. After nationwide house price increased by 22% over 2021, the strongest annual growth rate since the late 1980s, the pace of housing price growth moderated in most markets in early 2022, the review said. Today is, we're in April 2022. Future increases in interest rates could also weigh on housing and other asset prices. The RBA compared the historical relationship between interest rate rises and both supply and demand factors and estimated a major fall in property prices could be on the horizon. This is what they actually said, a 200 basis point increase in interest rates from current levels would lower real housing prices by around 15% over a 2-year period, the bank said. The bank said higher interest rates will increase borrowers' debt payments and high inflation will reduce the ability of Australians to make those payments, particularly if incomes do not increase alongside higher interest rates. Well, let's see where the income have gone. This graph we've seen before, house prices per capita income. So around the world globally or across the world, the house prices have actually decreased. This is in the vast majority of developed countries. Houses have become cheaper relative to the income over the past 40 to 50 years, while in Australia that ratio has more than doubled. So again, in the rest of the world, the property prices are going up, but the wages are probably going faster than the property prices. Where in Australia, the wages are going almost nowhere or going much slower than the property prices. I mean, this is a huge disparity. And the bank recognizes that by saying household debt relative to income is high compared to other countries and to historical levels, the bank said. Most households are well placed to meet higher debt payments because they have been making excess mortgage payments in recent years. However, high levels of household debt can lead to reduced spending should incomes fall or expenses rise, which is probably likely. The RBA said that tightening lending standards, as was done by the Australian Prudential Regulation Authority, APRA, last year, should help. APRA has strengthened its prudential oversight of individual banks to ensure standards are being maintained and the risk associated with high debt to income portfolios are being properly scrutinized, the review said. I somehow highly doubt that to be the case. So the highlight of this financial stability review that was done by RBA is really this a 200 basis point, which is 2% increase in interest rates from current levels would lower real housing prices by around 15% over the 2-year period, the bank said. Now, if they knew this, and we know that the property is everything in Australia, why would they actually increase the interest rates? Some will say, well, to curb the runaway inflation, but I'm not sure because if housing is everything, they're really not going to want to increase the interest rates because, as they even point out, their own increase of 2% would see in their estimation or projections or data crunching, house prices going down by 15% in 2-year period, which is really 7.5% per year, which is substantial enough, which is not that substantial compared to what they've run up in the last couple of decades, but it just means that that may be the top. Again, I've always said unless there's real wages increases, meaning that also the tax brackets expand, meaning that we actually have more money in the pockets even after we get these pay rises, supposedly. We can then afford those mortgage repayments even at these low rates, but that doesn't seem to be happening at the moment. Leave your comments. Tell me if you've got substantial pay rise in your day job, and if you did, how much more tax did you have to pay as a result of that?